You've updated us on the new strategy at SEGRO today, but what have you found since you took over as Chief Executive in April?
Well, as I said at the interim results in August, I was going to take a little time to have a fresh look at the business. Even though I've been around for the last 6 years, I think it's really important that as an incoming CEO you have a cold hard look at the business as a new CEO should do. So I have been taking my time to get out and see customers, look at a lot of properties, spend time amongst the assets and amongst our people, just to give a very clear view as to what is the platform I'm inheriting that we'll use to build our future growth upon.
So what were the key findings of your review?
Well, I was very encouraged by what I've found. In fact, SEGRO's got an excellent platform. It's an industrial specialist, which is a really good sector to be in. Industrial provides very good returns over the long run. We've got some fantastic market positions, very strong positions in some of the best industrial markets, and we have some really first-class assets, in many ways the primest of prime industrial real estate in the UK, as well as some very good emerging positions in continental Europe. We've also got an excellent customer base and a very diversified and good quality income stream from that customer base. And finally, we have an excellent operational team. So we're very good at all the disciplines like customer focus, leasing, asset management, managing our properties efficiently, and development as well. I also found that there are a number of assets, a number of areas of the business that are causing a drag on our overall returns. Too much land, having perhaps too many vacant buildings, too many long-term development sites, and in some markets we're subscale or the markets themselves don't really have strong enough fundamentals. So really what I've been spending a lot of time thinking about is what can we do as a business to address those areas of underperformance, build on the strengths that we have, and then convert it into something really that performs very well at the shareholder return level.
So how would you summarise the vision for the company now?
Well, the vision is to become the best industrial property company in Europe. And in order to do that, we have to be really good at just two things. One is operational excellence, and the other is about disciplined capital allocation. And disciplined capital allocation for us means we're going to focus on the highest quality assets in the strongest markets in the UK and Europe. We're going to focus on two main product types, which will be multi-let industrial estates in and around major conurbations and logistics. And within the major conurbations, we're going to continue to pursue opportunities to develop higher value uses, such as data centres or suburban offices or quasi-retail uses. We're going to continue to be very much an active property manager and developer, but what we need to do is to make sure that the balance of the portfolio is changed so we have more core, stabilised assets that are feeding the current income stream and some less and slightly different types of opportunity assets, which is where the development and the value add comes from, so that the overall balance of the portfolio supports what our shareholders want, which will be a high quality dividend stream. That means we're going to have to do a lot of work over the next few years. We're going to have to recycle quite a bit of capital out of some of the non-core assets, and we flagged to the market this morning that it could be up to about £1.6 billion of assets that we look to sell, and we'll be looking to reduce our gearing and then reinvest the bulk of the proceeds in new areas that we've identified for growth, particularly in the areas I've just talked about.
Is this really a growth strategy, or is it just maximising shareholder return on your existing portfolio?
Well, the strategy is really around maximising our returns for shareholders, but I think that involves growth as well. The big part of the job is to recycle the £1.6 billion of capital I've talked about and to put that into new areas which will give us growth and at the same time better returns for shareholders.
What parameters would you like to be judged by and over what timescale?
Well, what we've said to investors is we believe that the core of our focus should be on delivering very high quality, income-orientated total property returns at the portfolio level. And if we get that right and we underpin it with the right cost structure and the right tax structure, etc., then we should be able to deliver for our shareholders a high-quality, sustainable dividend stream and better NAV performance. That's something we hope will ultimately lead into total shareholder returns, and that's what really our shareholders are looking for. In terms of time frame, we haven't set out a specific goal in terms of when we want to get this all done. What we have said is we aim to make substantive progress within the next 3 years. Now, clearly, in market conditions, they are uncertain at the moment. That will have some impact on the pace with which we can make progress. But we're determined we need to get on with it.